Yo, what's up? It's Seth Moran from Monster Capital, and today I'm going to walk you through Japanese candlesticks. In a 20-year career as a managing director trading stocks for institutional investors, this is what I was best at. Essentially, one of the attributes I was known for on the street. Now, if you're staring at candlestick charts thinking they're going to magically tell you when to buy or sell, you're already behind and you're probably about to get worked like a chimp in heat. These patterns, they don't predict anything. They communicate information. They show you what the market's thinking, and it's the battle between supply and demand in real time. So Steve Nissen's book, Japanese Candlestick Charting Techniques, absolute gold. And I've said it before and I did a video on it. It's one of the best trading books ever written. Now, if you haven't seen my breakdown on that yet, I'll put a link in the description, but make sure you watch it after this. But today we're going to get tactical here. I'm going to give you real world examples and I'm going to walk you through the 10 patterns that you need to know and what about them actually matters. And more importantly, you will be able to use them right away after watching this video. Now, after I've finished going over my top 5 bullish and my top 5 bearish candles, I'll also talk to you about a centuries-old 3-5-13 theory and how markets move in emotional rhythmic cycles. Now, traders be nimble, traders be quick, but traders better be looking at Japanese candlesticks. Now, do your own due diligence. I'm not your financial advisor. These are my opinions and not representative of any legal advice. So with that out of the way, hit that like and subscribe button and let's drop the intro. So Japanese candlesticks go back hundreds of years. They were invented in the 18th century by the godfather of candles, Munehisa Homma. So this is before the US has even been established, right? So rice futures traders figured out that something most traders today still miss. Markets are driven by fear, greed, and uncertainty. And candles capture all that quickly, clean, and clear. Nissen brought this to the West in the 90s, and his book changed how technicals were perceived by the rest of the world. And it's still a go-to reference for pros and beginners alike. Now, if you don't have this book and are a trader, use my affiliate link in the description and buy this puppy. I just saw it for $45 on Amazon. You won't regret it, and it's much, much better than trying to look these patterns up on the internet with little to no context, because the book gives you the why. Trust me, I use it all the time. So let's break down the real patterns you need to know and how to trade off them like a pro. I'll put them into 2 categories, right? So pretty easy, bullish and bearish. But you have to be careful because the same pattern after an uptrend or after a downtrend can mean completely different things. Also, big shout out to TradingView. It's my favorite charting website that lets me chalk up all these charts for free. I just did a video on all these tools that I now use instead of using Bloomberg that I have for so many years. So check them out if you could when you have time after the video. So what is a candle? So what constitutes a candle from a candlestick charting perspective? So the rectangular section is called the real body. The real body represents the session's open and its close. And when it's white or a lighter color, maybe green, the bottom of the rectangle will be the open and the top of the rectangle will be the close. Now on a darker candle, usually the darker color, sometimes red, it shows that the top of the rectangle is the open and the bottom is the close, signifying that it was a higher open and a lower close. Now, the thin vertical lines above or below the rectangles are either called the shadows or the wicks. Not like John Wick with his pterodactyls, okay? But like the wick of a candle. Above the rectangle is called the upper shadow, and that shows the high of the day, and below is called the lower shadow, and that shows the low of the day. Now, if there's no shadow or wick on top of the candle, then it's called a shaven head. And conversely, if there's no shadow on the bottom of the candle, it's called a shaven bottom. Lastly, there's a doji pattern, which is when a candle has the same open and close price, or almost the same open and close price. It can be close. Dojis are some of the most important reversal indicators in all of the candlestick patterns, and basically, they just look like a cross, okay? So let's get into the bullish candlestick patterns. Now, these are my top 5 go-to candle patterns that signal buyers are in control. But don't get cute. Context here always matters. Bullish engulfing, my all-time favorite pattern. So here you get the red candle gets completely swallowed up by the green one. The green candle open needs to be at or lower than the previous candle's close. And the green candle's close needs to be higher than the previous day red candle's open. Now it's in the name. The green second or the middle candle has to engulf the previous day's red candle entirely. Now this is a solid reversal signal. It needs a third candle as confirmation, but only if that happens after a real downtrend, not in the middle of a sideways noise, right? So then the pattern doesn't really have the same influence. So let's check out this chart. You can see with IBM here on April 24th, a red candle getting eaten up by the green candle on the 25th. And then that confirmation candle comes after the weekend on the 28th. The stock ripped up 26% from here. I like this pattern because it was after earnings on the 23rd, which means there's less obstacles in the way. There was another bullish engulfing pattern that happened a couple weeks earlier on the 8th that started forming a large red candle followed by an even larger encompassing green candle. But on the 9th, that third candle didn't give you the confirmation that you needed. So therefore, it was inconclusive and it needs to be disregarded. Hammer time. So the hammer, you think long handle and small but powerful head. So it's got a long lower wick, small body at the top. I mean, it looks like a hammer, right? This means sellers tried, they failed, and buyers took the wheel. I love this one. Make sure it's after a downtrend. You still need that confirmation on the next day, so you need another green candle. But let's check out a chart here with Nike, ticker NKE, on September of 2024. We see a hammer after a downturn, and I'm showing you this one because it's not a perfectly formed hammer and has a small upper shadow, but it still fits all the criteria and has the needed confirmation on the next day. And then this puppy went on for another 15% run before earnings. So next up, we've got the inverted hammer. So it's a hammer, but it's just upside down, right? It's got a small body and a long upper wick that's at least 2 times the body length. It forms after a downtrend, and again, it can have small shadow or wick at the bottom of the candle. What this tells me is that buyers have tried to push, there's been a potential momentum shift. The long wick means buyers went up and they cleaned up a lot of liquidity that was sitting above, sweeping, as they say. The color of the candle, it really doesn't matter. So it's weak on its own, it's strong with volume or trend line or moving average support nearby. I also want confirmation from that third candle, which needs to be bullish. So if we look at Lockheed Martin, ticker LNT, on Jan 7th of 2025, there's an inverted hammer formed after a monster downtrend, right? It followed by an even larger engulfing green candle and actually forming a bullish engulfing pattern, making it even more bullish in my opinion. It rallied until bad numbers came out. Would I have honestly traded this? I don't think so. I would have needed a bit more from the chart to get in on this one after such a steep decline. Like maybe a bit of consolidation or leveling out first in the stock. Morningstar. So this is based off the planet Mercury that appears just before sunrise. So what this is a 3-candle pattern. So you have one short body candle between a long and red candle, the first candle, and a long green candle, the third candle. Traditionally, the star, which is the middle candle, will have no overlap with much longer bodies. But I have seen time and time again that minor overlaps on the candles tend to work out just fine. And I'll show you an example of that. So this is a momentum shift in real time. You spot this at the bottom of a trend, it signifies the selling pressure is slowing down. Now, I love this candle most when the second candle is actually a doji. Remember, that's the cross, making this a Morningstar doji. To get a bit more technical on this, if the second candle is a doji and its shadows, meaning the wicks, aren't touching the other candle's shadows, as in there's a visible gap, then this becomes an abandoned baby bottom, which is pretty rare and is something that sticks out immediately to me as a potential for a major reversal. Now, if we look at Hims and Hers Health, ticker HIMS, we can see the Morningstar pattern in formation, right? With a minuscule overlap of the short red body and the succeeding green bodies open. I literally think it's a 1 penny overlap, which I'm fine with again, followed by a nice 120% return, helped by earnings, of course. The 3 white soldiers, which I call the 3 white knights. Basically, these are 3 strong green back-to-back, meaning there's candle overlap and very little wicks, with the candles either being of similar size or getting successively larger as the stock's going higher. Basically, this means buyers are in full control. There's a clean uptrend continuation in play. I want to see this with volume and not after a parabolic run either. Now, if you look at this stock here, Apple, ticker AAPL, from November of 2024, you can see a pretty perfect 3 white soldier pattern following some consolidation after a downtrend. Honestly, for such a simple pattern, it literally took me like 25 stocks going back a year on all of them to find one this clear. It was driving me nuts. Now, if you wouldn't mind, take a second if you're liking this video to hit that like and subscribe button to help my channel grow. Let me know in the comments if you know of a better 3 white soldiers pattern out there that I missed. Now, on to my top 5 bearish candlestick patterns. Bearish candlestick patterns, right? These scream, the party's over, you don't have to go home, but you can't stay here, right? Again, context and confirmation every time. So the first one up is bearish engulfing. It's actually the opposite of bullish engulfing. Again, in tandem, these are 2 of my favorite candlestick patterns. Now, when I see these, I'm pretty sure that, the stock is in a situation, particularly after a decent uptrend for a bearish engulfing pattern or downtrend, when we're speaking of a bullish engulfing pattern, that there could be a pivot about to happen, right? So what we have here is the green candle gets eaten alive by the red one, right? It's just the bullish engulfing, but in reverse. Basically, you get a stronger reversal if it happens near a high. You get this pattern plus a volume spike, you have to take it seriously. Now, check out Applied Digital, ticker APLD. You can see a perfect bearish engulfing pattern after a massive spike higher. The green candle gets manhandled by the larger red candle, followed by another confirming red candle. This stock dropped 24% from that 3 candles close. Next up, shooting star. Sometimes you just need to be careful when you wish upon a shooting star, right? It's got a small body, a long upper wick. It's basically an inverted hammer after an uptrend. The price spiked up, it got rejected hard. Sellers are out there screaming, "Thou shall not pass." And you see this at the top of a route. And that's basically a warning shot. Now, if that's a doji formation, meaning the same open and same closing price, then this becomes a gravestone doji, right? And this is more bearish than a shooting star with an inverted hammer. Now, going back to that same stock that had the bearish engulfing, Applied Digital, you can see a crazy example of this on Feb 21 in this year. Once that shooting star formed, especially with such a long wick, it literally dropped 63% off the close of that 3 red candle. That super long wick just makes this such a brilliant pattern on this chart. Evening star, which is the nickname for the planet Venus, which shows up in the sky before darkness sets in. So it's pretty ominous. Again, it's a 3 candle pattern. You get the green candle, you get the hesitation in the middle, and the red candle, and then that big drop. So traditionally, there's no overlap amongst the 1, 2, or 3 candle real bodies. The wicks can overlap though. This is a textbook reversal. It's the market saying, we've had enough of this shit and we're done going up. Especially deadly after a strong uptrend. Just like the morning star pattern, if there's a doji on the second candle, then this becomes an evening star doji pattern. And if there's a gap between the wicks or the shadows of that second doji candle and the first or the third candle's wicks, then this becomes an abandoned baby top, which is very strong bearish reversal pattern. So here's an evening star in action on January of 2024 in Lululemon, ticker LULU. Check this bad boy out. This pup went up from $491 to $225 in August. That's a 55% drop post this ominous 3 candle pattern. Now, if you see this after a massive uptrend, there will likely be blood in the water, okay? And I will talk about the doji, but in a bearish context. Doji can be bullish as well, right? Now, if there's a doji after a downtrend, then that could be a signal for a reversal pattern. So basically here, the open and close are basically the same. It looks like a cross. The more volume here, the better, right? So on its own, after a downtrend, it would be bullish, but after a strong rally, now it means indecision and potential exhaustion in the stock. So here's an evening star doji on Apple, ticker AAPL in Jan of 2024. But you can see that the doji, which is actually a gravestone doji, coming after a small uptrend. So the downside, though being about 10%, wasn't that significant. But I wanted to highlight it because it's actually a pretty good looking pattern utilizing the doji. Now, dojis are super important, and alone they can signal reversals, but they become a lot more powerful when they're part of another candle pattern, like in this case with an evening star doji. So the 3 black crows, basically crows being linked throughout history to the gods of war, death, and fate, right? So not looking good when you see this pattern. Essentially, it's 3 long red candles back to back with each successful candle closing progressively lower. Again, same as the white soldier candle pattern, there shouldn't really be any long wick, but a small shadow, that's fine, right? It's purely bearish momentum. That's what this is. But heads up, if this comes after a huge drop, it might just be a panic flush before the bounce. So this is really best after a significant upturn. You can see a decent 3 black crows pattern on the Southern Co here, ticker SO, which is a utilities company at the end of 2024. Now, the stock didn't have a massive drop off after that. Basically, it was just off a small rebound, and the candles themselves were quite long and captured a lot of ground already. But I chose this pattern to show you because the candles are overlapping, they have very short wicks, and each candle got progressively bigger, which usually means you'll get more than a 7% downturn. Though that didn't happen in this case. Again, this isn't an exact science, which is why a lot of fundamental investors look down at technicals and candles. But I'll tell you, but these are the guys when they can't figure out a stock, why it's coming off or why it's going up, are calling you asking, Seth, what are you seeing in the stock, man? I can't for the life of me figure out why the stock is coming off here. And I'm like, well, that abandoned baby top on a decent volume should have been your first clue. This thing has a potential to retrace for another 30% or so from here. At which point I'd either get them a bid to get them out of the position entirely or have them just overwrite the position to protect their downside. So now that we went over my top 10 candles, let's talk a little bit about theory, right? So Munehisa Homma, who we talked about before, aka the godfather of candlestick charts, didn't just observe price. He studied emotion, rhythm, and timing in the market. Now, just to put in perspective how great he was as a trader and a student of market psychology, his amassed fortune in today's dollars would be roughly $10 billion. That's right, this dude made 10 yards. Some of it's family money, sure, but most of it was from his trading acumen. One of his lesser known but powerful ideas was a 3-5-13 theory, which is a time-based framework designed to help traders anticipate when a candlestick signals are most likely to be effective. The essence of 3-5-13 is Homma believed that market sentiment builds, pauses, and reverses in natural cycles, often at intervals of 3 candles. You can read days here. So when I say candles, it signifies a day. So 3 candles, 3 days, 5 candles, 5 days, etc. So 3 candles, the initial reaction or the hesitation. The 5 candle pattern, so there's confirmation or continuation. And the 13 candle pattern means that there's exhaustion or it could be a potential reversal point. Now, these numbers weren't arbitrary. Homma observed them repeatedly in rice markets, much like we see reoccurring patterns in modern financial charts today. They're basically Fibonacci numbers as well, and they're really just pointing out the moving averages of these time periods. So when we're talking about applying the 3-5-13 theory to candlestick patterns, the power of the 3-5-13 theory lies in timing the impact of a candlestick pattern, not just spotting it. So essentially, if we go back to it, so if we look at a 3-candle pullback during an uptrend followed by a strong bullish candle, this is potential continuation. It's not weakness. So if we look at a doji after a 5-candle uptrend, which may signal temporary hesitation rather than a true reversal, whereas maybe spotting an evening star at the end of that 5-day may actually mean the end of this trend, right? Now, a hammer or bullish engulfing pattern that appears after 13 candles of decline carries a lot more weight, and it aligns with that emotional exhaustion. So basically, Homma wasn't just looking at patterns in isolation. He was asking, how long has the current sentiment been in play, and what does that mean for the stock going forward? So Homma's 3-5-13 theory reminds us that candlesticks just don't show what the market's doing. They reveal when emotions are about to shift. And by layering time-based methodology over visual candlestick signals, you start trading with a much clearer picture of what's actually going on in terms of the stock with regards to the battle of greed, fear, and uncertainty, right? So I literally just skimmed over this as it's a long enough video as it is, but I will do another deep dive in this because it's really interesting. At least to me it is. And it's definitely something that can help you interpret candles when you're looking at all these patterns appear on the chart of the stock that you either want to buy or sell, or any asset for that matter. So the truth about candlestick pattern. Look, reading candles is powerful. It gives you real-time insight into who's in control, either the buyers or the sellers. But if you're using candlestick patterns in isolation to make decisions, you're trading blind. Like, candlesticks don't factor in crazy market-moving news hitting the tape, which we call tape bombs, or new product deployment, or supply chain issues, or the underlying fundamentals of the asset that you're trying to assess. You need context, like I said before, always. Use them with fundamentals. Pair them with other technicals like moving averages, oscillators, volume, support resistant trend lines. Think about the macro. What's the market doing? What's the sector doing? Candles are just little pictures on the screen, but you still have to understand the entire story. So one more thing, and it may just be the most important takeaway of this entire video. Stop looking at charts and using charts to validate what you already want to do. That's how traders blow up. I've done it too. You see a hammer and you want it to mean buy, so you convince yourself it's a reversal, even though the market's trash and there's no support in sight. Be honest, be objective, let the candles talk, and pair it with what's going on in the market. So candlestick patterns don't lie, but they don't tell the whole truth either. They're a tool, a sharp one, but they're most effective when used with the rest of your toolbox. Let me know a candle pattern that you like, maybe that I didn't cover. I'd love to chat about it in the comments. You know, if this helps sharpen your edge, hit that like button, drop a comment, and subscribe. This channel is about building confidence and taking that fear out of investing, not chasing nonsense. So let's keep learning this stuff together. Remember, kindness is the rent we pay on earth, so do something nice for someone, and I'll see you in the next one.